again, welcome back to Anu's Learning Zone. This is part 3 video of basic accounting, in which we are going to discuss about the modern approach. Along with that, we will discuss how to journalize the transactions. Okay, so according to this approach, the rules are based on 5 categories, that is asset, liability, expense, income and capital. Okay, so these are some of the examples of each category. It is better to study these examples because these are the usual terms or usual items that comes from assets, liabilities, expense and income. Okay, you can see these terms in the question paper as well. Okay, so it is better to study this, at least these examples. When we practice the questions, we will be able to find more examples related to each of this category. Okay, so moving on to the rule. This is the rule that is related to the 5 categories. Okay, we just want to check whether the value of the asset, expense, liability, income and capital is increasing or decreasing, and on the basis of that we have to give the debit aspect as well as the credit aspect for each of the category. Okay, so let's look on to the asset first. Okay, so when the value of asset increases, the rule says that if the value of the asset, any of the asset, no matter whether it is a fixed asset or current asset, both comes under one single category, that is asset. Okay, so when the value of asset increases, we need to debit that account, and on the other hand, when the value of the asset decreases, we need to credit that account. Okay, we'll discuss that in detail with the help of the examples. Okay, now just look on to the rules. Okay, both the asset as well as the expense have same kind of treatment. That is, when the asset as well as expenses increases, we need to debit that particular account, and when an asset or an expense decreases, we need to credit that account. Okay, on the other hand, liability, income and capital will be having the same kind of treatment. That is, when any of the liability or income or capital increases, means when it is introduced or when it is new to the business, or when it is added to the existing value, it means that there is an increase, so that we need to credit that particular account. And if there is any decrease in the value of liability, income or capital, we need to debit that account. Okay, so this is a simple rule that is related to all the 5 categories that comes under the modern approach. So when we compare the golden rule, that is the traditional approach, and the modern approach, I think this modern approach is quite easy for you to do the process of journalizing. Okay, so now we can go through some of the examples that is related to the modern approach, and also we will learn how to journalize these transactions. Okay, so let us start with the first example, that is started business with cash rupees 10 lakh. So as the business started with the cash worth rupees 10 lakh, the first and foremost account that we can identify from this simple transaction is cash. Okay, so as we know, cash is basically a current asset. That means it falls under the category of asset. The second account that can be generated from this transaction is, or this example is, capital account, which falls under the category capital according to the modern approach. Cash is introduced as a new asset to the business. Okay, so here the asset named cash is increasing. So we know that according to the rule of modern approach, whenever there is an increase in the asset, we have to debit that particular account. So as a result, we need to debit the cash account, because the asset which is mentioned in this transaction is cash. Okay, so that we need to debit the cash account. On the other hand, the next account is capital account. So here capital is also increasing. Why? Because capital is also new to the business. right? capital is also new to the business, so that it is also increasing. So when capital increases, what do we have to do? We have to credit that particular account. Let's see how it can be recorded in the book of journal. Okay, with the same example, we can go for the process of journalizing. So we already come to know that we need to debit the cash account and we need to credit the capital account. So this is the format of a journal. There will be 5 columns. The first column will be date, second column is particulars, third column ledger folio, fourth and fifth column is debit and credit column respectively, where we will write the amount that is related to the transaction. Okay. So in this given transaction, as it is an example, there is no date, so that we need not have to put the date. Okay, moving on to the particulars, column particulars. Here is the place where we want to write the journal entries as well as the narration. Okay, narration simply means the explanation that is given for the journal entry. Okay, so we know that we need to debit the cash account. Okay, so first and foremost thing that we have to write in the particulars column is, first we have to write cash account debtor. Okay, cash account debtor. And in the next line, we have to write the name of the account that we are crediting. According to this given example, the account that we need to credit is capital account. So we have to start with to capital account. Okay. So the amount, the account that is needed to be debited should write first. Okay. And the account that is needed to be credited should write on a second line with starting with 2. Okay. 2. Then the name of the account to be credited. So here it is capital account. So we have to write cash account debtor to capital account. In the debit column, straight to the cash account, we need to write the amount. So the amount which is given over here is 10 lakh. So we have to write 10 lakh. Okay, straight to the cash account. And in the credit column, straight to the capital account, we need to write the same amount, that is 10 lakh. Okay, and as narration, we have to write the same thing that is mentioned in the transaction, started business with cash. Finish. So this is the process by which we have to record a transaction in the book of journal. Yeah. Moving on to the second example, bought furniture for rupees 2 lakh. So the first and foremost thing is we need to identify the accounts. Okay, so as it is mentioned, the purchase of furniture is mentioned as the transaction. Okay, so the first account will be the furniture account, which belongs to the category asset. And usually when it is mentioned like bought furniture with an amount, it usually is assumed that it is a cash purchase, so that we need to write the second account as cash account. Cash account is also falls into the category of asset. Okay, furniture is introduced newly to the business. It means that there is an increase of asset named furniture in the company. Right, there is an increase of asset named furniture in the company, and there is a decrease of asset named cash in the company. So as asset increases, we need to debit that account, and when asset decreases, we need to credit that account. So as per the rule, we want to debit the furniture account. Now the cash balance becomes what? 10 lakh minus 2 lakh, right? 2 lakh, we spent 2 lakh to buy furniture from the introduced capital. So the cash decreases. So cash decreases means the asset decreases. So whenever asset decreases, we need to credit that particular account, so that we need to credit the cash account. Okay, so let us see how we can write it in the journal. Okay, so we know furniture account to be debited and the cash account to be credited. And here also there is no date, so we need not have to write the date. So we can go directly to record the transaction. Okay, so the account that is needed to be debited is furniture account. So write furniture account debtor. Then the account to be credited is cash account. So write to cash account. Okay, and straight away to the furniture account, in the debit column write the amount as 2 lakh, and straight to the cash account, in the credit column write 2 lakh, and write the narration bought furniture. Finished. Okay, I hope it is clear. Moving on to the third example, purchased goods from ABC stores, rupees 50,000. So here there is a change, or there is an introduction of new thing, that is liability. Okay, so whenever a name is mentioned in a transaction for the purchase or sale of goods, it means that that is a credit transaction. So here purchase goods from ABC stores, rupees 50,000 means we bought goods from ABC stores but we didn't make the payment. Okay, so if in a transaction a name is given, if sometimes it will be name of a particular person or maybe name of a particular company. Okay, so in the transaction related to purchase of or sales, if a name of a particular person or a company is given, it means that it is a credit transaction. It means we didn't pay for the same. Okay, so here one account will be purchase account because we purchased the goods. Okay, and purchases usually falls under the category of expenses. We have already discussed that in the first video where we explained the different terms that is used in basic accounting. Okay, and the second account that falls from this transaction is ABC stores. If it is made, or this purchase is made out of cash, the second account will be cash account. As it is not a cash transaction, we have to record the name of the company or the name of the person to which we need to pay the money. So here it is ABC stores. So the second account will be ABC store, which can be considered as a liability to the business because we need to pay to ABC stores in a future date. Here both the expense and liability is increasing. The expense increases and also the liability increases. So according to the rule, when expense is increasing, we have to debit that account. That means here the expense is mentioned as purchase account. We will not write expense account. Okay, we have to mention the particular expense name. So according to the transaction, here it is purchase account. So we have to write purchase account, have to be debited as it is increasing. And liability is also increasing. So whenever a liability is increased in the business, we have to credit that particular account. So we have to credit ABC stores account. Okay, so moving on to the process of journalizing. So the account that is debited is purchases. Okay, so write purchase account debtor, and the account to be credited is ABC stores. So we have to write to ABC stores account, and the amount is 50,000. You have to write in the respective columns, that is in debit and credit column, straight to purchase account. In the debit column we have to write 50,000, and in credit column straight to ABC stores account you have to write 50,000, and as narration you have to write purchase goods on credit. Okay, moving on to the fourth transaction, that is paid cash to ABC stores, rupees 50,000. So we have already made a liability towards ABC stores, and now we are paying it back. So the first account is ABC stores, and which belongs to the category liability, and the second is cash account, which belongs to the category asset account. So what is happening here? Both are decreasing. Both are have same kind of thing. Okay, that is why I use this image. Okay, so here liability is also decreasing, cash is also decreasing. That means asset is also decreasing. So when liability decreases, we have to debit that particular account. That is, we have to debit ABC stores account, and as cash is decreasing, that is asset is decreasing, we have to credit that particular account. That is, we have to credit the cash account. Okay, so the journal entry becomes ABC stores account debtor to cash account. Okay, so let us see how to journalize the transaction. The same thing, right? ABC account have to be debited, so we have to write ABC stores account debtor to cash account. Okay, amount 50,000, and the narration is paid cash to ABC stores. Okay, moving on to the last example, that is sold goods for cash rupees 5 lakh. Okay, so the one account will be cash account, because after sales what happens, we get the cash, okay, which belongs to the category asset. And next is sales, which falls into the category of income. So at the time when I explained the term sales in the first video, I said that sale is the major source of income to the business. So sales is considered as income to the business. Okay, so now what is happening for cash account and sales account? Both are increasing, right? Both cash account as well as the sales account is increasing. Okay, the asset increases, so that we have to debit that particular account, that is we have to debit the cash account, and income is also increasing. So when income increases, we have to credit that account, that is we have to credit the sales account. Okay, the journal entry becomes cash account debtor to sales account. So again, in the journal we have to write cash account debtor to sales account and amount 5 lakh, narration sold goods for cash. Okay, clear? Yeah. So by this we are come to the end of this video. In the next video we will be explaining the process of journalizing again with some of the examples, and also we'll try to discuss the process of writing the or doing the posting in the ledger accounts. Okay, so yeah, thanks for watching.